How Russia and China's economic strategy is crashing the dollar. For decades, the dollar has dominated global trade. The strength of a country's currency is determined by the strength of its economy, and America's economy is by far the strongest in the world. For the past 80 years, the US dollar has been the most popular currency in the world, and this reserve currency status has given the US extraordinary leverage over the global economy, allowing it to dominate larger players such as Russia and China. But guess what, guys? This is where China and Russia has devised a grand strategy to end the dollar's global dominance. Hello everyone, welcome back to Finance Insights. In today's video, we will go through Russia and China's hidden strategy for crashing the dollar in great deal. So let's get started with the analysis. Looking back 10 years, the US dollar has a 71% market share among global reserve currency in 1999. However, it has decreased to less than 59% in the last decade, and if China and Russia's strategy succeeds, we may see the development of a new reserve currency in the form of the Chinese yuan in the next decade. So the question is, what is the China and Russia's master plan to end the dollar's global domination? How do they intend to dethrone the US from global superpower status? And last, what are the hurdles that China and Russia will encounter in the global currency wars? To understand this China-Russia approach, we must first understand why the US dollar is so powerful and why it has nearly a monopoly status among the world's reserve currencies. First, the dollar acted as a reserve currency of trust, with the US declaring in 1994 that if you have dollars, we will swap their worth in gold at $35 per ounce. So now two countries that may or may not trust each other can trade without incident. So if a transaction occurred in dollars, the US ensured the value of dollars with gold. So you could trade with any countries using dollars and be confident that it could be used to trade with any other country to buy any other commodity. But, in 1971, Richard Nixon appeared out of nowhere and destroyed the gold standards, allowing everyone to trade in any currency they desired. Even still, practically all countries continue to use the dollar. But why? Because the dollar was the only currency capable of purchasing oil from the Saudis. And why is this so? Because in 1945, US President Franklin Roosevelt struck the deal of the century with the Saudi king, in which the US guaranteed Saudi Arabia's security in exchange for the Saudi king agreeing to sell oil in the US currency. So if you wanted to buy oil, you required US dollars. This is the second reason for the dollar's dominance. The quick network connects the third superpower. And how does a fast network operate? Through the use of US funds held in the US bank accounts. Today, almost 200 countries and 10,000 bank deals in US dollars and keep their foreign exchange reserves with American banks. And the catch is that if a country has $100 billion in forex and only spent $30 billion on import and export, it could have a $70 billion surplus. These countries will invest their excess foreign reserves in the US Treasury bonds. As of January 2022, Japan had $1.3 trillion in the US securities, China held $1.06 trillion, and the United Kingdom held $608 billion in the US government's bonds, for a total of $7 trillion held by the US. This sum is greater than the combined GDP of France, India, and Russia. In other words, the US possesses three superpowers. By the way, these extra dollars are also known as petrodollars, and this is where Russia and China disagree. Russia is unable to use its dollar accounts in the United States for trade, and most Russian enterprises have been removed from the SWIFT network. When two superpowers were mistreated by one giant Uncle Sam, they were enraged and banded together to take down the great United States of America itself. This is where China and Russia began their strategy. Russia is one of the world's top producer of oil and gas. So while Saudi Arabia and other countries sold oil and gas in dollars, Russia penalized adversaries by forcing them to buy Russian oil in rubles. As a result, despite their dislike for Putin, most European countries were forced to acquire ruble. So instead of US banks holding dollars reserve in the payment network diagram, all unfriendly countries that bought oil from Russia suddenly had to keep their money in the Russian state bank. This indicates that, like the petrodollar, the petro-ruble is rising. Looking at Russia's dollar reserves, you can see that they have been planning to get rid of dollars since 2014. This is the power Russia wields over Europe. Similarly, China has leverage with the countries participating in the Belt and Road Initiative. China's Belt and Road Initiative is a $3 trillion project in which the Chinese have made substantial loans to governments all around the world. There are 165 nations in the world that owe China a total of $385 billion under the BRI plan. And many of these countries have taken on so much debt from China that they cannot afford to pay it back. This is where Chinese strategic move comes in. Expert believes that China would now encourage these countries to take and repay loans in yen, and in exchange, China will incentivize the scheme by offering them a 1% interest reduction. Furthermore, with the 25 BRI member countries, China is currently the largest trade partner, indicating that trade leverage for China is quite powerful. China might put pressure on these countries to use the yen instead of the dollars by combining trade and debt. But because all of these countries are primarily impoverished, how will China and Russia persuade rich countries like England and South Korea to abandon the dollar? To begin with, Russia firmly supports China and has already made the Chinese yen the reserve currency. This is a huge step forward, and other countries have something called a bilateral currency exchange agreement. The reliance on the US dollar is reduced significantly, and guess what? Beijing has negotiated bilateral currency swap agreements totaling more than $3 trillion with more than 40 countries around the world. This includes $400 billion with Hong Kong and South Korea, $350 billion with the Bank of England and the European Central Bank, $300 billion with Singapore, and $150 billion with Russia. And as icing on the cake, because China is the world's largest manufacturer, accounting for about 20% of the global manufacturing, they might use this to pressure corporations to pay in yen rather than US dollars. What's more, guess what? Now, Saudi Arabia is considering selling oil in yen, which means that if Saudi begins selling oil in yen, many countries will rush to buy yen. And as we saw this excess forex being invested in the US bonds, excess yen will be invested in the Chinese bonds, further strengthening the Chinese economy. This is how China and Russia gradually developing currency strategies to dethrone the US dollars as the world's reserve currency. So this method appears to be rather simple and clear, correct? Does this suggest that the yen will dethrone the dollar? Well, that's not easy either. What are the difficulties that the yen will confront in this currency war with the dollar? The first challenge that both China and Russia will face is their international reputation. China has a bad reputation for death-trap diplomacy and the invasion of Taiwan. The West has already encircled Russia. Second, China has been weakening its currency on a regular basis. Indeed, the United States has accused China of currency manipulation. Furthermore, it is now evident to the world that China is not as transparent as the US, which will dissuade countries from choosing the yen over US dollars. Finally, the US certainly does not like the yen's growth, and with the amount of money and military leverage that the US has, it is not difficult for them to push back against the Chinese yen. And the key to all of this will be digital dollar and its struggle against the digital yen. So that brings us to the end of today's video. We hope we were able to give you useful information and that you enjoyed our video. If you did, please hit the like button to make the YouTuber happy, and please subscribe to our YouTube channel for more informative business, finance, and politics case studies. Thank you very much for taking the time to watch. We hope to see you in the next one. Goodbye.